Yo, what's going on, guys? I'm just gonna make this really quick. Because I'm busy tonight, but I'm just gonna be going over my trades from today. So 9:40 a.m. Okay, so yesterday, as you guys, if you watched my video yesterday, I actually alerted like this fair value gap, same setup yesterday in the morning, and it failed. Why? Opening volatility, and I guess my bias is wrong. This morning, I didn't alert it, and I didn't alert because I didn't want to make the same mistake yesterday. And again, taking these fair value gaps off open, they can work, but they're very risky because volatility can stop you out. And then at 9:40 a.m., I posted this in my rough bias right now. I thought we could retrace more in the 4-hour. We ended up only retracing to, I'll show you what fair value gap we retraced to. So we ended up only retracing to this fair value gap, and I said in a Twitter DM earlier, I'm like, we're in a 4-hour fair value gap. I really hope we don't bounce here, but we did, unfortunately. So yeah, I mean, this could be IDM, and we could go all the way down to here. I'm gonna be watching that for that, but for now, we already bounced this fair value gap. So this was my rough bias this morning. So I was bearish this morning, okay, and that's my bearish bias this morning. It did help me because we dropped a decent amount this morning. We dropped a lot, and then we bounced in the middle of the day. But and then at 10 a.m., we're long if we close with this 5-minute, or short if we close under around 5 minutes. So this was at 10 a.m. And if we go to 10 a.m., I gave them the entry, and I gave them the alert, and I gave them the stop loss. So at 10 a.m., as you can see, we had this, okay? And what do you guys know this to be? This is a triangle, or whatever retail calls it. And I don't play these. I already said, obviously I'm bearish, but we'll play the upside too if we get it. So I had a feeling this was going to break down, okay? And I forgot about the PMI data. There was PMI data today, and no matter what, I kind of already knew the data was going to be bad because it went along with my bias, okay? And if we look at the 1 minute, okay, what do we see? Fair value gap. And I missed this entry, unfortunately. I think I was upstairs getting something to eat when this happened. So we got to right here. I realized I missed it. I saw we were in this fair value gap, and that's when I was like, well, since I missed this fair value gap, a better entry or another solid entry would be take whatever this away closes over. And I said take the 5-minute close over, and as you guys can see, where is it? Right here. We close over this, so this is when you ideally should enter. And so what I do, I said stop loss would be closed back above / below the trend line. And a lot of times on these trend line breaks and stuff, if it's gonna work, all there will be is a retest. So obviously this wick could have gone and retested that and then gone down again. But you still wouldn't have got stopped out. But some people like to wait for the retest because even if we do under here, some people will not be able to get past the psychological barrier of being down almost 10 points, because it would have went up 10 points right here if we want to tested that. So that's why I kind of I said just wait for the close, because no matter what, there's no way you're getting stopped. This was like very, very clean play. So I know a couple of people got in. The guy who was checking marking this, I was talking to him in chat, he got in. I gave them the targets, target 1, target 2, and these were not random targets, okay? So both targets ended up hitting. These were not random targets. I'll show you why I picked my targets. So if we go over to the left, we target liquidity. So liquidity are the last swing lows and last swing highs. So this was target 1. This was target 2. You can see target 1 hits, target 2 hits, and we bounced right off target 2. So again, bottom tick to take profit there at target 2. We bounced 10:55 a.m. I said entering here if we get it. This was I think the 1 minute or 5 minute or maybe 3 minute. So here's an example of a breaker block that I wanted to enter, and I'm just going to show you guys something. So this was the 3 minute, okay? And this red candle right here is a breaker block. This red candle right here is a mitigation block. So what does that mean? This is a breaker block because, okay, because we take liquidity, which means we go over the last swing high. So we took liquidity, so this would be considered a breaker block if we broke below it, and we did break below it. And as soon as we broke back under, that's when I was looking to short there. And I said, I had this marked on the, this is actually the 5 minute. I had this marked on the 5 minute. So the 5-minute one and 3-minute one lined up, and I said I was going to short there. And then changing my entry to be safer, okay? And I changed my personal entry, and you'll see what I said next. So I changed it to the mitigation block, which I should not have done. I never realized the 3 and 5 lined up at the same spot. So the 5, so that was a more high probability trade because they lined up at the same spot. But this was obviously not really a mitigation block because it's only one red candle, one green candle, so it's not really that good. And then what I ended up saying, if you guys can afford, take half the position here. Why did I say that? Well, because I saw we were rejecting this initially, so I was like, well, the train might leave without me and I might not get my entry. So I said take a half position right around here. And then I had the targets out all for them. And again, even if I'm too slow to alert the targets, you should know all your targets should be at liquidity. So this was the target right there, which just hit. This was the target down here, low a day, and what else was the target? This order block, just in case we bounce off it. So those are my 3 targets. We only ended up hitting this one, so it was from when I alerted, it was like 3744 because I alerted a little down here. First target obviously hit 10 points, so that was a decent 10-point trade. And then we ended up blowing by my first entry, but in my premium announcements, I say this: I only trade from 8 to 12. I take all limits off during lunch, so I don't think anyone ended up entering because it hit 12 o'clock. You can see the time. Look, this is the 12 o'clock candle. So I never bothered taking the re-entry here because I don't trade during lunch. So yeah. And then I also said this. So see how we created these engineered equal highs up there? In live time, remember, this is all in live time. I'm not really posting this after the fact. I said we'll probably hit these equal highs 200 and you notice we have equal highs right here, and if we go to the NASDAQ we have equal highs as well. Okay, so those are very, very engineered, so I knew we were going to hit those. Okay, and so we ended up hitting those. I had this down here just in case because I was actually going to enter down in this fair value gap, but we never got our entry. And as you can see, it does look like a cup in hand a little bit. So I never got my entry there. I said yep because we ended up hitting it after I said that. 124, next target. This is very, very important. So I knew where price wanted to go, okay? So I knew price wanted to hit 1 hour buy side liquidity. Why? Because we bounced off the 4 hour fair value gap, and that was US 100. We bounce off the 4 hour fair value gap, and where does price want to go after we bounce off fair value gap after a market structure shift? So we have the market structure shift, fair value gap bounce, where does price want to go? It wants to go to buy side liquidity, which is the most recent swing higher, so right there. And we ended up hitting that. So knowing that, that's when I started looking for long setups, okay? And I said maybe done for the day. And it's really good to tell yourself, well, I'm going to be done for the day, because it really makes you wait for a really good setup. And then at 2 p.m., this is the 3-minute chart. I missed these fair value gaps, unfortunately, but I'll show you them anyways. So we got this fair value gap here, rejected right there, hit liquidity. Technically, there's no market structure shift here, which is why I actually didn't take it, or why I didn't like it, but these can still work. Especially if you draw this swing low to this swing high. Let me just take these off. These can still work, like, if you're in premium. So technically we're in premium. So like I guess that's my only explanation for why it worked. And I said missed this fair value gap. And at the time I had this fair value gap drawn, but I never said anything. I just had it drawn because I thought we were gonna bounce there. But I didn't say anything. So we ended up bouncing off this, and then here's my banger alert that I posted 15 minutes or 15-point alert. So we bounced off this. I never actually posted that. But as soon as I saw us bounce off that, I saw this trend line. And what's so important about a trend line? When market makers make these trend lines, when have you ever seen a trend line that goes up, rejects, and then just goes way down? Like, whenever market makers create perfect trend lines like this, we usually we end up breaking them. And that's what I thought was going to happen, because on the 4 hour, I knew we were buy side liquidity. I posted Discord. I bet we hit that next target. And I said 2:17 p.m. Longing if we close over this 3-minute, targeting the black line, and I meant the dotted line, obviously. Stop loss would be closed back under the trend line. So I was up. Well, I was up here. I think I got a fill like 3,792, so I was up 2 points. I was up like 4 points, but I never learned that. And I said, this is important. I said, waiting for close under. If it doesn't close under the 3 minute, I'm staying in. And if you go to the 3 minute, it never closes under, okay? My stop loss was if this closes under. And that's why sometimes it's important to rely on structure for a stop loss rather than having your own stop loss, because sometimes you're going to get shaken out of this. But they do that, market makers do that on purpose to stop it out. And I said, if it's up to you guys, I never said I was exiting though. I said, if you guys want to get out here at break even, I do not like this consolidation. I stayed in anyways because I was trying to hold for the target. And I said, if you're still in, get out if we close under this trend line at 5 minute. We never did, as you can see. And then I was up 5 points. That was so this was at 2:34, 2:36. So at 2:36 p.m. I never posted the chart because I was actually driving. But once I was up 5 points, I started scaling out. And why did I scale out so quickly? Well, we were just consolidating, and I didn't really like that, as I said. So 5 points is a great trade still. So I ended up getting it out at 5 points. And let me just go to USF. So I ended up entering like 3,792, and I exited like right around here. And this was a exit point, but I entered a little higher than that because I was, like I said, I was driving. And then went to 8 points, just under high day, but didn't sell there. So I was up 8 points, I didn't sell. And then I went to play tennis after, and obviously this ended up hitting the dotted line. So I'm sure people left runners to that dotted line. And look, this dotted line is liquidity. So as soon as we hit it, we go above it, and we can see we just go right back below it. So if anyone held and tried to hold to the way up here, they would have gotten wrecked. So so this dotted line is pretty important. This is liquidity. If you know where liquidity is, you're gonna find these setups. So we were under liquidity, and a lot of some people take trend lines and they get wrecked. Why? Because they take them in the wrong spots. But this downtrend line was still under liquidity. So with the fact that we broke up this went along with my bias because I thought we would hit this liquidity. And same deal goes for if we're above liquidity. If we're above a buy side liquidity, you should start looking for downtrend line breaks. So obviously this is a really bad one. I wouldn't really consider this one. But let's say there was a clean down or clean uptrend up here. You'd start looking for uptrend breaks. But if we're below buy side liquidity, then you want to look for downtrend breaks. And yeah, so that's really important to know. Again, liquidity will tell you everything. If you know where we're going, then you're gonna know what plays to take. And the one thing that helped me knew where we were going this afternoon was we bounced out of this fair value gap, doji, like kind of a hammer candle. So that just was bullish to me in itself. And remember, according to the model, we must hit buy side after a bouncing out to FVG, and we must hit buy side after. So that's why I was still buy. So obviously those helped. Again, the only possible loss someone could have had today was if they ended up re-entering there, but I literally said the first entry I gave was right here anyways. I don't know why I changed that. But we got 10 points off that. And then obviously if someone entered right there, they would have gotten stopped for like 3 points, which my winning trades were both above 10 points. This was a 15-20 point move. The other one was a 15-20 point move. So I mean, even if there was one loss for like 4 points, it was basically nothing. So yeah, those are my trades today. I think it's really important you guys understand where liquidity is because that can help you play trend lines better, even if you are a trend line trader. And we didn't end up closing over this, which is interesting. And very, very interesting, to be honest. I didn't even have this trend line. But yeah, hope you guys enjoyed, and enjoy the rest of your night.